Ever felt overwhelmed by the financial jargon thrown around on Wall Street? Terms like bull markets, hedge funds, and blue-chip stocks can seem daunting. But what if I told you that mastering investment literacy could be your golden ticket to wealth building? Today, we're breaking down the basics, demystifying the buzz, and showing you how to turn knowledge into financial success. The information provided in this video is for educational and informational purposes only, and does not constitute financial advice. Part 1. Understanding the basics. Investment literacy starts with understanding the fundamental concepts. Let's start with stocks. Stocks represent ownership in a company. When you buy a stock, you become a shareholder, owning a piece of that company. Example, take Apple Inc. When you purchase Apple stock, you're buying a small share of the company. As Apple grows and profits, so does the value of your share. Bonds are another essential concept. Bonds are essentially loans you give to corporations or governments, and in return, you receive regular interest payments. Example, consider U.S. Treasury bonds. When you buy a Treasury bond, you're lending money to the government, and they pay you interest over a specified period. It's a low-risk investment that provides steady returns. Part 2. Diversification and risk management. Diversification is a key strategy to mitigate risk. It means spreading your investments across various asset classes to avoid putting all your eggs in one basket. Example, think of Ray Dalio's all-weather portfolio, which includes stocks, bonds, commodities, and cash. By diversifying, you protect yourself against significant losses if one market underperforms. Let's take a real-life scenario. The 2008 financial crisis. Investors heavily invested in real estate and mortgage-backed securities faced enormous losses. However, those with diversified portfolios, including safer assets like bonds, managed to weather the storm better. Part 3. Reading and interpreting financial news. The financial world is flooded with news, reports, and analysis. Understanding how to interpret this information is crucial. Look at financial news not as a source of anxiety, but as a tool for informed decision-making. Example, when the Federal Reserve announces changes in interest rates, it impacts various investments. Higher rates might mean lower stock prices, but higher bond yields. Investors who understand this can adjust their portfolios accordingly. Part 4. The importance of long-term thinking. One of the most critical aspects of investment literacy is long-term thinking. The stock market can be volatile in the short term, but historically trends upward over the long term. For example, Warren Buffett, one of the most successful investors, advocates for long-term investments. He famously said, "Our favorite holding period is forever." This mindset helps investors stay calm during market downturns and benefit from long-term growth. Let's take Amazon as an example. In the late 1990s, it was just an online bookstore. Many investors were skeptical, but those who saw its long-term potential and held on to their shares have seen extraordinary returns. Part 5. Building a personal investment plan. Creating a personal investment plan tailored to your financial goals, risk tolerance, and time horizon is crucial. Start by defining your goals. Are you saving for retirement, a house, or your child's education? For example, Jane, a 30-year-old professional, aims to retire at 60. She decides to invest in a mix of stocks for growth and bonds for stability. By regularly contributing to her investment account and adjusting her portfolio as needed, she sets herself on a path to achieve her retirement goal. Part 6. Real-life success stories. To inspire your journey, let's look at a few real-life success stories. 1. Peter Lynch and the Magellan Fund. Lynch managed the Magellan Fund at Fidelity and achieved an average annual return of 29% over 13 years. His success was due to rigorous research and a deep understanding of the companies he invested in. 2. Chris Sacca. Sacca, a venture capitalist, saw the potential in startups like Twitter, Uber, and Instagram. His early investments in these companies turned into significant wealth as they grew. 3. Ellen and Paul's retirement plan. Ellen and Paul started investing in their 30s with a clear retirement goal. They diversified their portfolio with index funds, bonds, and some real estate. By staying consistent and avoiding panic during market dips, they built a comfortable nest egg for retirement. Investment literacy is your bridge from Wall Street buzz to wealth building. Start by learning the basics. Diversify your investments, stay informed, think long-term, and build a personal plan. Your journey to financial success begins with a single step: educating yourself. Dive into the world of investments today and let your money work for you.